And when it says, over the last 5 years, now gold has officially outperformed Bitcoin. That is like because of the last, call it 4 months.
Correct.
Like if you take the whole, let's just take the last 4 years before this last 12 months, and Bitcoin has crushed gold. That being said, you blend all of that together over a 5-year period, right? That's where blended risk comes into play, diversification comes into play.
Mm-hmm.
Then you can cherry pick this data point, and it's outperforming over the last 5 years. What's going on, guys? Welcome back to another episode of Money Moves. As always, your host, Matty A, my co-host, Mr. Ryan Breedwell.
Howdy, y'all.
We are back with a jam-packed earnings schedule.
Yeah.
Lot of stuff going down in the precious metals market this last week, a historic week. A lot going on in crypto right now. Obviously, we'll get your take on the post-FOMC meeting with Mr. Powell. Trump has officially nominated his next Fed chair. We got a lot to unpack today. First and foremost, how we doing, Mr. Ryan Breedwell?
Doing great, man. Trading some, getting some money in the market for some people.
Basic. When you say trading, you doing like some day trading?
No, I can't day trade.
No.
But like reallocating maybe is what I should say, a little bit better, but it does require a trade. But yeah, we're doing some reallocations for some clients. I got some new clients this last month of January. I'm getting onboarded, getting everything squared away for 2026, getting ready to do planning for 2026. My brother this will be his first year in the business. So
he finally passed his test.
Yeah.
Shout out, Jared. Well done, sir.
And then he's kind of recruiting his buddies to create a lot. He's actually moving to Lincoln.
Oh.
Him and his buddy bought a house. Well, his buddy's parents bought a house and they're renting it off the parents.
Okay.
So good to have friends in high places.
Yeah.
But yeah, good week. My son Banks turns 9 months old on Friday.
Wow.
Yeah. So time is just flying on by.
Yeah, it does. That's for sure. Well, we've got some positive data in the market this week. ISM, U.S. manufacturing activity expectations were 48.6, came in at 52.6, which is the fastest expansion in 4 years. Now, to give a little context, below 50 means it's somewhat contracting and not necessarily a good thing. Above 50 is a positive thing. So to go from 48 all the way up to 52 from the previous print, that's the strongest pace since 2022 that we've seen. And overall, kind of lines up with what Scott Bessent has been saying, what this administration has been saying in terms of we got to bring manufacturing back into the U.S. And obviously that takes some time to, see some of that momentum build up. It seems like we're seeing the very beginnings of this manufacturing engine within the U.S. getting revved up again.
Yeah, I would agree. And it's going to be telling on Thursday or Wednesday this week. Maybe the podcast episode day or the day after. I know we have non-farm payrolls on Friday, but I think we have ISM services, which is actually projected to contract. But if we get a contract to above a 50, I think it's like 53.4. I think it's expected to be around 50 in the 52 sub 5, so 52.3, 52.2, somewhere in there. If we can get a beat on that, like an expansion in the services sector as well, which, to be frank, is going to translate into the stock market a lot quicker because those are going to be tech focused, likely service-based companies. That would be a very impressive number rolling into Friday's non-farm payroll. If we can get a good non-farm payroll, I think the market's pricing around 60,000, 70,000 non-farm payroll jobs. So if we can get not a huge surprise to the downside there, but a good report, we should have a solid week. We've had choppy earnings
Give us kind of the rundown of what the previous week and this week's earnings have looked like from your perspective.
So today there's still a few that are rolling in today that I haven't looked at. We talked about like Chipotle before we got on, and some of these are pulling back for reasons that, it's like measuring with a yardstick, versus a measuring tape. Like, it's an old way to do a very static thing, but just not in a very efficient manner. So what do I mean by that? I don't feel like the way that we used to look at the market is going to apply to how the market is going now. So, for example, same store traffic, which is why Chipotle had that big pullback.
Yeah.
I don't think that bodies in your store as a fast casual restaurant is very important.
Is as indicative of strength of the brand as it once was in the past now with technology like DoorDash and Instacart and people picking up stuff and going and things like that. Is that what you're kind of...
Yeah, correct. Like, I don't think that they need to, because what they're going to do is they're going to count that as a transaction that happened at the POS.
Mhm.
So
versus at the register, body in store.
Versus a DoorDash, those are not going to register, from my understanding, as in-store sales, in-store. But they're doing the majority of their sales through these platforms nowadays. And a lot of days it's like high majority. They've ramped up their catering business. They're kind of doing like the Taco Bell, hey, here's this, order this, it's dinner.
Yeah.
All the sides are done, all the proteins are done. Everybody's going to be happy, set it and forget it. That is good for them, but people are not going to go into the store. That product is designed to be made in the store and leave it and go to your home and be a fast, casual dining experience. Those metrics that we used to use when we didn't have...
And Chipotle is just one example. You're saying
correct.
Many different...
Then I would say very specifically in the dining space that would be the case. Anywhere where you can buy off DoorDash, I would say that grocery shopping, since Instacart and now DoorDash and now other a lot of people use those a lot. So you cannot count that metric against yourself when it's the metric working for you. You know what I mean? So I think a lot of the dip in that has the potential to be bought back up pretty quickly. 20% in a day is a pretty aggressive.
Yeah, it was 11%.
Yeah. I'm thinking of PayPal. But we have all these massive, massive pullbacks in the middle of a rotation. And I would call Chipotle like a tech food company, right?
Yeah.
Like, they're a more forward-thinking food brand. I don't think that this is going to be a rut that they get stuck in. And we're moving into summertime, the taco season, the queso with guacamole. I don't see this being a reasonable pullback. Similar in PayPal, filing for a bank charter, not giving as strong of guidance as people wanted. What you have to realize is on some of these pullbacks, it's almost like being a kid and complaining, right? I didn't get what I want, so I'm going to throw a fit. And for investors, and sometimes it's hedge funds or institutions or large retail traders or medium-sized traders, no, that's not what I want. I'm going to rotate out and go into something else. And we are seeing a rotation because people are like, okay, AI is a good catalyst, but AI is now going to start bleeding over into other stuff. And I think the areas that AI is going to affect the most is industrials and energy. So I would expect those two categories to be very strong this year, if not stronger than tech.
It seems like a lot of people think those sectors are somewhat undervalued right now based on AI sucking up a lot of the attention the last 12, 18 months.
Yeah, and behind that one, I would say healthcare, because AI is going to revolutionize healthcare, how we get it, how we pay for it, so on and so forth. So I think a lot of the volatility that we're seeing, this is child's play compared to last year.
Yeah.
And B, I think a lot of people are going to use those as entry opportunities or entry points. I'm using those as entry points for a few of my clients. I'm not saying I'm getting in at the bottom, but I'm buying as the market's at least down. I was buying today. And it's just, people constantly forget these. When you have, what's that stupid, the Kobayashi letter or whatever? Like,
Kobayashi letter.
Man, They're like Jim Cramer 2.0. I mean, if they tell you something's bad, like that's a for sure buy signal. I even think Tom Lee was tagged in a post by them and literally commented on it like LOL. Like you're so dumb. Trying to bait people into your fear baiting. I think the letter said like Ethereum, he has remember the unrealized lossers?
Mm-hmm.
Oh, they have a $6 billion unrealized loss. Well, let me give you the magic on how to deal with that. You ready, guys? You don't sell. Oh, I know, crazy, right? You would have to choose to realize, let's educate people on losses and paper losses, Matt. Do you have paper losses?
Yes.
When do you choose to realize paper losses? It's a magical time we all have to deal.
I would say when I need to play the tax game in a very strategic manner.
And are paper losses negative sometimes? Negative sometimes meaning you have bought an asset at something and it's worth less right now. Is that a good time to sell that asset? If you sold that asset, would you realize the price at a lower value? Have you had said asset and then in the future, said asset is now worth more than when it was worth less?
Yeah, I just didn't do anything.
Holy cow. If you sell that asset at that time, do you ever realize now what? Profit. Welcome to paper profits 101. It's just, it's the weakest weak sauce shit I can ever hear when people say unrealized losses. Do you know what GAAP accounting is? Do you know what an accountant would do with that? They would make it go away. I mean, it's not realized. So none of that stuff is of matter. If Bitminer, that's the name of his company, right?
Mm-hmm.
If Bitminer got to a point where they had obligations that outweighed their...
Well, Saylor's going through the same thing, right? On his Bitcoin position, because they're somewhat underwater in their Bitcoin position.
Is it below 76?
Yes, it's 74.
Okay, so now he's going to have to start paying premiums. So he'll have premiums due. This is not a huge deal in the short term. If this continues, this is where, and I want him to fail, this is where it would be really fun to watch.
Yeah, that's
because he would do it again, the same thing he did in the early 2000s when he had to BK. He'll BK. And they'll unwind all the debt, and everybody that invested in MicroStrategy because you're a stockholder, screwed. I mean, you probably will get nothing if this happened. I'm not saying it will. And then the bondholders, oh God, they're going to make out like absolute villains. And it's all going to be like institutions that were betting against them and buying debt because they know if you fail, we are a debt holder. You are going to pay us back first before you pay your shareholders. And you're so leveraged out of your fucking eyeballs that you won't be able to pay your shareholders. So we're just going to get in line. We'll let you pay us 7, 8, 9% while you're trying to pay a 14% dividend or 11% dividend per month or something like that. I don't know what it was. It was some stupid yield. Said it last year. Bitcoin is not Michael Saylor, and Michael Saylor is not Bitcoin.
Yeah.
But what Michael Saylor wants Bitcoin to do, it will never do. It just won't. And eventually it was going to do something like this. It will constantly be a derivative store of value. That's a much faster way. I mean, paper gold, in my opinion, is superior to Bitcoin because it's not as volatile. And you can trade it now on an ETF just as fast as you can. I would argue it doesn't have the upside potential that Bitcoin does.
Sure. Yeah.
But that's your real downside.
Yeah.
That's your real downside. Do you want to invest in a derivative space where you're hoping somebody buys it and it can go in a real fast run? I mean, gold kind of did that. Or would you rather go in something that is it's real? It's like tangible real. Bitcoin is not real.
Yeah.
It's made up, synthetic. And it can still run. I mean, we've seen a good run in gold in the past 3 years. It hasn't done what Bitcoin has done. I'll give it to you. But it also, in the short term, hasn't done what Bitcoin's done.
Well, I mean, as of today, if you go Bitcoin versus gold, gold has officially outperformed Bitcoin over the past 5 years following recent market shifts. That's kind of crazy to say, right?
Probably tip Peter Schiff over like forward and he'd freaking stand up, legs and arms straight out. Homie is brick mode.
Oh, he's feeling
He's probably probably like, I don't think he's on the ground. When he walks, there's probably like a freaking levitation between him
Well,
and the
I
ground.
mean, obviously you've always said this, right? I mean,
He's an idiot, by the way.
bears can
I
be.
don't like him, but everybody has their day.
I was gonna say, and he's having his moment right now.
Yeah.
He's been beating this drum for quite some time, and mind you, outside of the last, and when it says, over the last 5 years, now gold has officially outperformed Bitcoin. That is like because of the last, call it 4 months.
Correct.
Like if you take the whole, let's just take the last 4 years before this last 12 months, and Bitcoin has crushed gold. That being said, you blend all of that together over a 5-year period, right? That's where blended risk comes into play, diversification comes into play.
Mm-hmm.
Then you can cherry pick this data point, and it's outperforming over the last 5 years. I mean, we've seen a historic run in precious metals, and we also saw this past week the largest crash in the history of metals in a 24-hour period. A near $10 trillion swing in precious metals market cap over a 24-hour swing. We saw 7.4 trillion erased. Silver crashed 32%, wiping out 2.4 trillion from its market cap. Gold fell 12.2%, wiping out nearly 5 trillion from its market cap. The following 12 hours from that, a couple trillion more. So, I mean, to me, that seemed like more of like an institutional engineered shakeout. Like all the retail that was FOMOing into silver and gold. I think it was JP Morgan had like a perfect short, like right at the peak that they, kind of timed and engineered.
We had a pretty good call. We called, I don't know when, it would line up with the values, but I mean, we were both here. The thing is, are you kind of catching on how easy it is to almost do market predictions? If it's talked about heavily, it probably the opposite of that's going to happen.
Yeah, it is.
And so it was so heavily talked about. I just have to know to do the opposite.
Yeah.
And that's why contrarian investing is so easy to be successful, because I can't tell you the law, because there is a law behind it. It's like the law of large numbers, but it's not that law. You cannot follow the crowd.
Yeah.
Too many people knowing something makes it not special, not unique, not desirous. So it's out of favor if you are following the crowd. It's like being in a line of sheep, not seeing anywhere in front of you, but following the front sheep, and they're just going off a cliff.
It was interesting. To that exact point, I saw somebody say this in crypto Twitter the other day. They were like, if everybody starts agreeing with your stance, that's when you need to pivot on your stance.
Yeah,
right?
Because you have a bunch of people that don't know what they're talking about.
Yep.
And all those people they're agreeing with you to buffer their brain, because they're like, I'm doing what this person's doing. If they say it works, I'm doing it because it works. Welcome to the majority of crypto.
Yep.
So that whole dichotomy is one why crypto moves, really fast up, but it also is why crypto, precious metals, things that happen like GameStop and AMC, they move so fast. It takes them weeks to have to run
up, and they take the elevator down, right?
Yeah, and the elevator with the snapped cable.
Yeah.
I mean, we're bouncing off the springs. So it's
snapped cable.
It is.
And you know what? I guess I'm just learning this by being a participant in a small order of this, but these are the things that the more you talk about them and the more you experience them, right? I mean, this is how you learn and build skill as an investor, and it's also how you kind of eliminate a lot of the noise and remind yourself that it doesn't need to be way more overcomplicated than what many people would make you feel it is.
Correct. It's it's shocking how complicated people make it.
Mm-hmm.
And I know that people make it complicated, and really the people that make it complicated are like institutions, so that you feel that you're reliant upon somebody else to be successful. And it's really, I don't want to spit in my own Wheaties here, because people rely on me to be successful. We are the professionals in managing emotion, managing diversification, and knowing what to do when everybody's running with their heads cut off. And a lot of people look back at people like Warren Buffett and wonder, how is somebody that's been such a simple investor been so successful? And you just answered it, because he kept it simple.
Yeah.
He bought into companies he understood. He held quality companies through times of turmoil, invested in them in times of turmoil, and held them more. And he doesn't do anything different than that. And he will not change the recipe up, because the recipe works. It's not overnight. And he'll tell you that Berkshire's made a ton of mistakes and missed out on hundreds of billions of dollars in investment gains. But you would look at his company being worth about $1 trillion and saying, well, if you messed up and you got to $1 trillion, I want to mess up like that too.
Yeah.
And it's failing forward. When he made the Air with Salomon Brothers in 2008, he didn't back up. He was the first person to go out and hold the press conference. He was like, hey, look, I invested in a bad company. We're going to try to help make people whole. When he invested in Geico and they were failing, he dug them out, and now they're one of the most successful P&C companies in the United States. He does very good at doing what he knows how to do and keeping it very simple.
Mm-hmm.
And people want it to be more complicated than it is, and it just doesn't have to be.
Yeah. So last week we're talking about, and I think this might tie into some of what we're seeing with crypto, and maybe we'll see with crypto, or just, the economy, stocks as a whole. A lot of people, freaking out about the US dollar index dropping below a certain, number where historically we like to see it. We talked about this a little bit last week, which was, the US dollar, and collapse is a pretty aggressive word, but we'll just say, a pullback in the US dollar's strength. A weaker US dollar helps drive looser financial conditions, a higher nominal GDP growth rate, higher asset prices, higher US exports, and a lower trade deficit, and easier debt servicing for the US government, which right now is a really big deal with where our debt is at, right?
Correct. Yeah, it's actually not. It's like bad news on that or what sounds like bad news is actually good news, because it helps our trading partners purchase at the same or at a higher level, which increases, like you said, our exports. So if you're a business and you're buying more than you're selling, that's not good for your books. And when we're selling more than we're buying, that helps balance our books out. It just, the reporting style that the media does on that is disingenuous and makes it sound bad.
Well, and this was a post that I saw the other day when somebody was saying, everybody's freaking out about the US dollar collapsing and Trump's losing control. And yet he's on TV saying, yeah, the dollar's doing great. And when you really zoom out, this person I thought did an interesting job of, here's why weak dollar benefits America. US exports become cheaper globally, like you mentioned. Foreign buyers now flood in for goods, knowing that they can get more bang for their buck.
Or people that were like, it was on the fence.
Now are,
yep. And maybe they, the old saying, throw what you know. They're like, wow, I actually like buying now. So I am going to just, even if the price goes back up, I'm going to continue to buy.
You got them in the ecosystem. It's hard for them to break away from it, right? Yep. Then you've got manufacturing comes back, which is a big deal for U.S. jobs, for just our overall ecosystem that we're trying to rebuild back up within America on the manufacturing side, making us much more competitive globally. Then you've got $36 trillion in debt that can get inflated away in certain capacities. China and EU competitive advantage now is really chopped off at the knees in a lot of ways. So a strong dollar means America buys cheap foreign goods, which is, great in certain circumstances and times. But a weak dollar means the world buys American goods, which we know what we want right now on a global scale. We want everybody coming back to Papa.
It's almost like when we go to Mexico, like, I'm happy to be there, and so is the local shop that's selling me 3 tacos for $1.
Mm-hmm.
But I'm still losing money, and they're making money. So the party that, it doesn't matter if my dollar's worth more than their dollar or their currency, I'm still losing money.
Yeah.
I'm just getting more for what I'm losing.
Yeah.
It's still a loss.
Yeah.
It's just, I don't get how that's hard for people to understand. It's really, no matter if it's a good deal, if you go and buy it on sale for $15 or you buy it full price for $20, you are losing in both regards. Just you're losing less or you're losing more.
Yeah. So I saw this as an interesting take on the internet. I think I sent it to you. I'll read it on here as well, just because I thought it was interesting. Everybody knows the kind of the rug pull terminology when it comes to, being synonymous with crypto, right? And this was a crypto account that likes to take some, have some interesting takes on financial, Twitter, economics, and mainly crypto. But he said, the U.S. is about to rug pull the entire earth. Likely scenario at this point due to China, Russia, and the East absolutely crushing the gold trade is that the new Fed chair comes in and buys tons of Bitcoin as a matter of national security. Bitcoin has been playing around 80 to 100 mark for too long. The government has allowed you to buy Bitcoin and ETH freely for over a decade. If you're late, that's on you. We are slowly running out of time. U.S. buys a massive Bitcoin and ETH reserve and will implement a policy that they'll only trade with countries that have a Bitcoin reserve, and this sends gold to $1,000 and Bitcoin to $8 million a pop. BRICS has no idea who they're fucking with. Remember what Trump said about the U.S. Wanting the U.S. to be the crypto capital of the world? That wasn't just an expression, that was a promise. Again, very out there and extreme.
$8 million.
$8 million a pop. But at the same time, I'm like, man, if that was what they were engineering in the background by getting everybody scared to rush into gold, and then knowing that we are going to be the quote unquote crypto capital of the world, we are holding Bitcoin. They may create some Bitcoin strategic reserve for the U.S. The new Fed chair, Kevin Warsh, has said if you're under 40, Bitcoin is your new gold for the rest of your lifetime. So we do know that there's some bullishness or, sentiment around cryptocurrency and Bitcoin.
It's just volatile.
Yeah, and that's still, right, the big hole in that whole kind of scenario. But here's another interesting take. I think I sent this to you as well. Michael Saylor laid out America's plan to rug pull BRICS by adopting Bitcoin and dumping gold, which is a little similar, less extreme than what this guy was saying. But let's give it a listen to what Saylor has to say.
Very simple idea is buy 20 or 25% of the Bitcoin network on behalf of the U.S. government, catalyze the development of that world reserve capital network, and then let all the Chinese and the Russians and the foreigners sell all their other assets and buy Bitcoin, and then the money flows into the United States. If you want to put a great twist on it, dump your gold, sell all the U.S. gold, buy Bitcoin, then the trade is free because you could buy 5 million Bitcoin for the cost of the gold. You will demonetize the entire gold asset class, and our enemies hold gold in their banks. So their assets would go to zero. Our assets would go to $100 trillion, and we would control the world's reserve capital network as well as the world's reserve currency network.
As usual.
I mean, that's not untrue. Just like
it's pretty out there.
That happen.
Yeah, it's pretty out there. And again, there's still like a lot of that value in gold itself.
But yeah, and that's like assuming people just sit back and watch it. Like, oh, look.
Yeah.
Wow, damn it.
Yeah, I mean, I don't see people going, I'm gonna dump all my gold, right? Like that's.
Well, you would think China would have done something like that if that would have worked. China would do anything.
Yeah, they would.
To get to number one.
Yeah,
so they would have done some stuff like that already. And they manipulate currency. They do a bunch of stuff. I don't think that would be possible to orchestrate. If it was possible, I think that's true. But like when the U.S. they would have to sell all their gold, first of all. That's gonna like immediately tell everybody what's up.
You're tipping the cap on.
And then you would have to buy. I mean, like, who's buying all that gold?
Yeah,
I don't know. It sounds interesting.
I mean, it's interesting, but it's highly unlikely. Now, given a little more context to who the incoming Fed chair likely is going to be, Kevin Warsh. He's the youngest Fed governor in history during the 2008 financial crisis. Said the Fed waited too long to raise interest rates in 2022. He said the Fed lost credibility by overstimulating post-COVID. He said QE inflates asset bubbles and worsened inequality within the United States, claims to support a rules-based Fed, not discretionary policymaking. He wants a smaller Fed balance sheet. and more focus on price stability. It does sound like overall he is more hawkish than dovish, which is somewhat contrary to what many people thought Trump would be pushing, which I don't know what your thoughts are, but I think it's a little bit of they think we're going this way and we're going to go this way.
That's what I would say. My guess is they just don't want to spook the market. So they're acting.
Which it kind of did though, right? Wasn't the following day of that announcement somewhat of a sell-off? I know crypto had that, or a lot of people were pointing at
Crypto went down. The stock market was fine. The stock market's now gone in cahoots with the crypto market. But I still think there's going to be a cut in June or July, and then a cut between October and December. So I still think there's 2 more cuts on the table.
Yeah.
But pretty much after that, I don't think that they're going to cut anymore. There's no reason to. I think people just think that like the only time the market goes up is when we cut rates. There's going to be a point where the data that says we can't or we shouldn't, and it doesn't, if we got here using this metric, we have to stop because the metric says that we used to get here that we don't need to do it anymore. Banks need to be profitable. The federal government needs to be profitable on lending money that's not yours. And just like, you don't get free money. You have to like invest the money into something and then pay it back with interest. That's how using others' money efficiently works. But if people will do that and do it like they did from 2011 or 10 through 2019, we can have a kick-ass economy. The difference is people are under the spell still that they think interest rates have to be zero because the last time it happened, interest rates were zero.
Yeah.
So we just don't need that though.
Yeah.
We don't. The market's at an all-time high and interest rates are way higher than they've ever been.
100%.
So it's not a necessity to make the engine chug forward, but retail investors have to be on board with that. And right now, if you go get a loan, it's still, they're still getting used to that 5-6% number.
Well, one thing that is, in my opinion, a great thing for any and all Americans is most of us, the day you're born, right? You kind of inherit some level of debt from the U.S. government. And the Trump administration with the Trump accounts is trying to at least give people a stake in the future of America. It was just confirmed that under the Trump accounts, by age 18, you can have $303,800 and $1.1 million by age 28. That's if you are doing the maximum contributions within those Trump accounts. With no contributions, if you did nothing, you would still have $5,800 by age 18 and $18,100 by age 28, which I still think is awesome. That, again, my belief is just get people in the game, right? Give them some stake, some skin in the game. Those are going to be the ways that you learn and you get people to actually pay attention to the stock market. And what if I contribute? And what if I don't? What does this look, right? Like the gamification of investing, there's something to be said for the way we as humans are wired. We like to see numbers go up. We get fearful when numbers go down, right? So if you can create that positive reinforcement and incentivize people to contribute to their accounts, especially parents who, I'll give the shirt off my back. I'll do anything for my children. And most people will. And so if there's a way that you think you can help your children and their future within this vehicle, most people hopefully are going to do it versus the alternative of not doing it. And even if you're not doing the contributions, just to have $5,800 or $18,000, by the time you turn 18 or 28, that is a win, I think, for any and all Americans that are going to benefit from the Trump account. So I thought that was pretty cool. Something positive that came out of the Trump administration this past week. We also have new data. Home buyers are canceling deals at a record pace. As we mentioned, still one of the best buyers markets since the history of the 2008 financial crisis. Right now, 16.3% of home purchases were canceled in December, which was the highest rate for this month on record dating back to 2017. Over 40,000 pending home sales fell out of contract last month, according to Redfin. By comparison, that's 15% were canceled in December of 2023 and 2024. Atlanta was amongst the highest cancellation rate at 22.5%, followed by Jacksonville and San Antonio at 20.6%. Just some little things that were noted out of the National Association of Realtors Commercial Division. The counselors for real estate, the counselors of real estate, they shared its annual look at the top of mind issues pressing on commercial real estate in the year ahead for 2026. The top issues to watch in commercial real estate in 2026, in no particular order: fiscal and monetary policy. We all know the reasons for that being important. Portfolio risk, the changing nature of real estate. And I think this is something that ties into kind of your side of the fence as well. It feels like with technology, with AI, with geopolitical, the world being a little bit closer than what it once was, right? Feeling so far and distant, so inaccessible, everything being so close, so connected, so intertwined now. There's a lot of things that industries, whether it's the financial markets, whether it's the real estate market, things are changing, right?
Right.
So like you have to be willing to be nimble and be on your toes and be willing to adapt. So that being something that I think, obviously pay attention to that. Capital sources and flows of where the capital is going, transformation of real estate through technology, the future of real estate, global chess, the crisis of confidence and uncertainty, housing attainability, pricing risk, and the flow of people. So those were kind of some of the topics that were discussed at the convention. I really do believe that we're going to look back on this decade and look at it as a decade where what once was is not ever going to be the same going forward in the future. I think COVID was kind of like the catalyst that honestly, it still feels like like two separate lifetimes of like pre-COVID and now post-COVID.
Mm-hmm.
And then you layer in just the advances of technology with AI, with politics, with all the stuff that's going on. It feels like there is a lot of stuff shifting right now in ways that create probably one of the greatest opportunities we'll ever see and experience in our lifetime. I know a lot of people are scared. I know that uncertainty and that fear and that doubt creates a lot of anxiety and tension for people. But I also know that the people who are leaning into the discussions and are staying optimistic and are just consistently moving versus staying stagnant. It doesn't mean that you always have to feel like you're 100% in the right place at the right time or that you're always going to be moving in the right direction. But the fact that you're moving, you're talking, you're taking action, and you're reassessing while you're doing those things, that's where you're going to take the real-time data and feedback and results to make little tweaks and adjustments along the way, whether it's in your portfolio, in your business, in your life, to continue moving the needle forward in the direction that you know is going to be beneficial and aligned with kind of the outcomes that you want. It just feels like this is like it's happening in real time right now. I don't know if you feel that. I feel that. And I feel it in like sometimes a little anxiety ways, but I also think in very productive ways that I'm like very excited about what's coming. It's just like when you're in the middle sometimes, when those things aren't finalized or solidified, I always call it the messy middle of like you started here and you're trying to go over there and you're like in the middle of the journey. It doesn't always feel comfy. Doesn't always feel good.
Growth zone is uncomfortable for a reason.
Yep.
It's said it before, I'll say it again. It's never, we make it look a lot easier than it is. And that's where a lot of people get caught in thinking that being an entrepreneur is quick or easy. But there's just a lot that goes on beneath the surface. I know in your world and in my world that a lot of people don't see or know or have an idea of. But those big, we deal with big problems and have big positive outcomes as well. That's what happens when you compound forward and you fail forward. And it's as simple as that.
Yep. So as always, we appreciate you guys tuning in each and every week. I'm trying to see if there's any motivational mindset. Oh, here we go. This is the one that I wanted to say for today. So this was Chamath.
I hate this guy.
I know. I'm honestly not a fan of Chamath. I don't really like his brand. I don't like his But every once in a while, he's got
This is the fucking dude in India that tells you that what you're buying is brand new and totally just rips you off.
he kind of has that vibe for sure.
And he's Indian.
5 billion net worth. This was so
Like, just
whether you like him or
lies.
not, I
Just
think
lies.
you can relate and find inspiration in what he's saying here, because I think this is the message that I want to relay to everybody in this time of where we're at in the markets, where we're at in the world, where you're at in your career, whatever it is. Let's give this a listen and see if any of this resonates with you.
Serious. Get it. It is going to be made. It is going to be allocated. And you have a moral imperative to make sure that if you have a point of view that matters and you want to reflect it, you get it. I'm going to go get it. Other people are going to go get it. And then it will be about a competition of views. And don't wrap yourself in all this liberal kind of bullshit about oh my God, money, blah. No, stop. Here's how the fucking world works, okay? It drives the world for better or for worse. So that's what you have to do. You got to go and get it. I will never judge you, and you should not judge me for what that worldview is. But the point is, the more diversity of those views, the more rational actors we have, and the more of a balanced, fair system. That is what diversity really means to me. It doesn't mean let's manage back to a quota. It doesn't mean okay, we need a black guy, a brown guy, we need a people. That's not what it means. This is what it means, right? There are people in this audience that have probably dealt with the same kind of life that I've dealt with. You have a very unique worldview that matters. And in the absence of capital, you're irrelevant. With capital, you're powerful. And then you decide in small ways, in medium-sized ways, in large ways, right? And it just depends on the scale of capital that you have. And so that's what's necessary now in capitalism. Get the
fucking money.
Not incorrect. I just,
Yeah, he's just not your brand. He's not your flavor.
He just lied to people to get his capital and made his money off of people losing their money, which is capitalism to a degree. But I also just don't like it when people. I wish he had that energy on his business adventures. He just doesn't. He just is. He's like one of the worst investors I've watched in modern times.
I mean,
he has 4 or 5 failed SPACs. He made millions.
You know what's kind of crazy is when you look up a lot of the wealthiest people in the world, they did it by lying, cheating, and stealing.
Correct.
Which is unfortunate. So back to his point, go get that fucking money.
Go get it.
And knowing that you're a good person, I mean, you and I talk about this, we want to be ultra wealthy to continue to do more amazing things.
Cool things.
Right?
Yeah.
Selfishly for ourselves, but for so many other people as well. Knowing that you have the right intentions, that you didn't fucking lie, you didn't cheat, you didn't steal from somebody to get that. And I think that's a message that anybody who's got good intentions, good moral compass can get behind. So don't feel bad or guilty about going and getting your fucking money, because somebody's going to get it. It's going to be somebody like this guy, right?
Don't lie.
Yeah. Do it the right way.
Integrity.
And do it in a way that you can sleep well at night, but also know that it's out there for the taking. Somebody's going to get it. It might as well be you. So hope you guys have a great rest of the week. As always, we appreciate you. Don't forget to check in. Text us 844-447-1555. You can connect with Ryan and his team on X-Ray if you want them to dive into your investment portfolio. I've got the deals list for those that want to be investing in passive income opportunities on the ownership side. If you want to know more about the income fund that we are launching this quarter, this is basically, first position loans collateralized by real estate that are just paying out a fixed coupon, no upside, no, real risk tied to operator performance, things like that. This is just basically being the bank. You can text the word income to 844-447-1555. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.
Cheers, y'all.